I don't care what people's philosophies are. That's not how you make money. What you make money on is owning the best performing asset on a risk adjusted basis. So what I tend to find is that the mid to upper part of the curve, which is networks gaining adoption, do best. ETH last cycle, Solana this cycle, and whoever it's going to be this cycle, whether it's Sui or whether it's Near or whatever it is, I don't know. We will see that, right? That is the easiest opportunity we get in the space to generate wealth. So firstly, focus on that. If we're going from 2.5 trillion to 100 trillion, do that, you'll make a lot of money.
Yeah.
And so then I just filter out as many people as possible. I really only get signal from a few people that I'll ever listen to. If you tweet something, I'll always read what you tweet because I think you'll have a high signal to noise ratio. Most people are high noise to signal ratio. And so I'll observe it for sentiment and any nuggets, but I try and filter out as much as possible and just stick with, unless something shows that network adoption is slowing, I'm right. So just capture that.
Right.
Then I don't FOMO in the rest. I just don't do it. So I don't spread. I did that last cycle. I tried to spread amongst this narrative, that narrative. And what I do now is really simple. I just put the chart against Solana. If something looks like it's a sustained trend against Solana, I'll allocate some capital to it.
Former Goldman Sachs executive Raoul Pal recently revealed that he had invested heavily in the Solana network's native token, SOL. Paul said he had allocated 80% of his cryptocurrency portfolio to SOL, while the rest comprised meme coins, non-fungible tokens, and his digital asset-focused investment fund. All his Ethereum are now NFTs, non-fungible tokens. Buy high-end are NFTs. Next, he owns part of the Exponential Age Asset Management Fund of hedge funds portfolio. He has 1% in WIF, Dogecoin, and Bonk. Paul's optimism about Solana is justified. Solana became popular again last year after payments giant Visa announced it would use blockchain technology to speed up credit card payments. Then there is the meme coin craze, which has taken the cryptocurrency markets by storm. Solana has seen the launch of thousands of new meme coins, which have racked up billions of dollars in trading volume in recent months, helping the fifth largest blockchain overtake rivals such as Ethereum, Avalanche, and BNB Chain in areas such as user activity, growth, and adoption. As for what prompted him to invest heavily in Solana, the chart he highlighted in 2022 was the Solana Ethereum chart. And this is the chart that led him to buy Solana and then go all in. Solana is up over 1,200% from its 2022 closing price of $9.85. On the other hand, Ethereum has gained around 150% from its closing price of $1,200 price in 2022. According to Raoul Pal, only these two coins can replicate the move of Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana.
How I started framing this, I always try and simplify, and I've got it down to this. This is the underlying, it's the new underlying infrastructure for the internet, as we've talked about. And people get confused. When I go around marketing our fund of funds, people get confused still but there's this Bitcoin narrative, this narrative, that narrative. And I'm like, stop. These are all decentralized businesses that sell block space. And they have different qualities to their block space or a different narrative on what makes their block spaces effective. And that is, once people see that these are essentially decentralized businesses that operate and sell block space, people start to understand. And what's unique about this infrastructure layer, it's the first infrastructure layer in history that we can all participate in because of the behavioral incentives of a token system versus equity. And so when I look at it, I just look at the growth of the space, and it grows at 100 and something % a year, which is twice the speed of the internet, because obviously it's built on internet rails, so it should go quickly. And I just extrapolate that trend out, and I look at it, and it's like, well, it's a $2.5 trillion space today. If we carry on, by 2032, it's 100 trillion. I'm like, that's the largest accumulation of wealth in all human history in the shortest period of time.
It also considers two crypto ecosystems as pioneers in the fight for control of the cryptocurrency market. His quest was to find the next Solana, like the tremendous Solana boom. He identified two main competitors, the development of smart contracts on move-based blockchains and the use of cross-chain fungibility through Cosmos, Atom, Sui, and Aptos, Apt, are the two leaders of the Move blockchain ecosystem, while Celestia, TIA, is the new Cosmos SDK-based project that is also worth waiting for. Paul said, Sui and Aptos represent the Move protocol, but have other unique features and use cases. It says that if the digital asset sector continues at the same growth rate, its total market capitalization will increase approximately 44 times in less than 10 years. The explosion of total market capitalization of crypto assets will be the largest wealth creation opportunity ever seen. Today, it has a market capitalization of $2.5 trillion. If we simply extrapolate the trend growth rate, it will reach $100 trillion around 2032. This is therefore the largest wealth creation opportunity in human history. He notes that traders should be careful not to adopt a tribal mentality when it comes to digital assets and take on maximum risk. Our job in this area is no longer to be a philosophical and tribal about what to invest in and waste it all. Our job is to maximize opportunities as best we can. And it's a balance between how you take risks, because many people go all out on 10 risks. Speaking of meme coins, Paul revealed that his two biggest bets, equally weighted, are WIF and Bonk, and he's been investing in them for a while now. He still holds Dogecoin because he believes Elon Musk will probably do something with Doge eventually. Apart from these, he does not have any additional investment. He focuses on comparing charts to each other, such as Bonk versus other meme coins. He admits to having difficulty with the direction of the Bonk and WIF chart, which is why he avoids very early investments. He doesn't have time to delve into pump and dump projects to figure out what might move. Paul explained that what is happening is just speculation about whether cultural memes will become big. He doesn't mind, as long as everyone knows it's like betting on raindrops on a window. He also sees it as a way to test what could happen. There is still value in these things. Dogecoin has proven its worth, as has Shiba Inu. These two or three will persist, and this meme will continue to create additional value. Although he's not sure what will ultimately create value, he doesn't believe everything will go back to zero. He predicts that the market will soon enter what he fantastically calls the banana zone. Expect this period to trigger a real madness in the crypto sphere, which will continue until 2025. This phenomenon is linked to a global liquidity cycle that shows a clear cyclical character since the financial reset of 2008. This development is explained by the adjustment of rates of interest and debt maturities. According to Paul, this creates an ideal macroeconomic rhythm. The start of crypto summer could kick off the altcoin season, where cryptocurrencies like Ethereum and Solana could significantly outperform Bitcoin. However, he warns that the period could be fraught with confusion, with currencies reaching stupid prices and other assets reaching stupid valuations. He offered critical advice to cryptocurrency investors, urging caution against leverage trading and investments driven by fear of missing out. He advocates investing primarily in the top 3 or 5 crypto assets and highlights the importance of self-custody wallets. The strategy focuses on holding for the long term, expecting frequent market pullbacks, and suggests that smart investors should buy the dips when possible.